I want to move on and circle back to the thing that you had mentioned about exits. I want to speak more to you. I just want to hear more from you about how do you think about exits. And I also want to add on one thing from probably my experience. There are many founders who get sometimes this feedback about from investors about how can we get an exit? Or they want sometimes the founders to answer this question for them that how this investor can get an exit. And sometimes it's hard to think about it. What are your suggestions? How do you go about thinking that we can probably take this exit, take that exit? Largely, traditionally, there are only a few ways: IPO, acquisition, strategic buyout, all of these things. But how does one take those things and present that to the investor?
See, you missed out one more exit that is always continuously happening, and these are secondaries. Series B, Series C investor is buying out the early investor. So that's the most active form of exits that a lot of people, a lot of early investors are seeing. And I'm not talking about the institutions, but I'm talking about early angel seed investors. They all end up making money on secondaries. They all end up exiting in a secondary round where there's a growth investor that's come with a different time horizon in mind that they want to stay on for 5 to 7 years. But when you're pitching to investors, I think if you're in a segment that's already crowded, the top 1% of your peers in that segment would have already been delivering these exits. So if you're raising seed, you know you're going to raise series A, B, C. And sometimes in the business plan, you should talk about your next two raises, but also tell the investor that, look, I have visibility for 2 years, but I think if I do this in 2 years and I raise this round, I think I can also do this round in about the fourth or fifth year. And that's how we also advise early companies to represent their business plan. I think a question popped up, right? You have to build a business plan on a 60-month horizon, but you have to be very sure of those first 18 to 20 months, because that
Mm,
first 18 to 20 months is where you'll use this current round of funding.
mm,
If you're raising a crore of rupees, you know that you're raising it for at least 18 to 20 month runway.
mm.
Right? And from there, if you've reached even 70-80% of that target, from there, you need another round of capital. You should put that in your business plan and say that potentially, if I reach this stage, this is my ARR, these will be my numbers, and for that, I need to raise this round of capital, which will get me from there to another hemisphere. So it's
Yeah,
important that you talk about it. So the investor coming in today will also know that you're thinking that far ahead.
makes sense.